Hi, Michael here. Welcome to the update of January 2023. It's weekend, so obviously all the exchanges in Europe and US and also in Asia are still closed. But that's a good thing because it means that we can use the weekend to do some cleaning up. Um, there's a specific weakness in my daily routine. I'll explain that later, and that's why every now and then taking a weekend to do some catching up is not a bad idea. But before we get there, maybe a little bit of a review of what's been happening in the markets here and what we may expect. Obviously, a great start of the week. We've already made some money, albeit modest. Um, but what we have to be aware of is that obviously as of next week we will start seeing the earnings coming in of the fourth quarter of last year. And uh, although we've seen the markets are restoring their faith a little bit from the hits that we took early in the year, few people are expecting massive positive earnings over the fourth quarter, and that may very well reflect in lowering rates next week or even over the coming weeks. Obviously, fear of recession is still there despite the fairly stable job market um, in the US. But of course, the downside of that is if this fairly strong job market also translates into spiraling wages, we may very well not see the end of the inflation that we're experiencing at this moment. Um, the daily routine, I've never really been into it already before. But this is basically what I do every day, and it takes me several hours to do that. At this moment, there's over 600 stocks in the watch list that we follow. A little bit over 200 are stocks that we can update quasi automatically, but it still means that 400 stocks need significant manual intervention to keep them up to date. And obviously, I do not succeed in treating them all four of them every day. So what I'm doing there to cover as much as ground as possible is after I've processed the automated inputs, I'll manually start looking at the largest risers and how long that takes and how many that are depends on how successful the trading day was. Obviously, if we look at past Friday, um, January 6th, where we had a very bullish day, there will be much more risers than on other days. But I'll try to cover as much as possible of them. Then I'll be looking at the stocks that have just broken the first resistance because that can often be a signal that further increases or even rating changes may occur. Obviously, I'm doing everything I'm doing here for one reason only, and that is to have a sweet spot. I want to have a collection of stocks that have a rating of accumulate or buy and that have a spread between the current price and first resistance of at least 10%. And then if I have time, I'll start looking at the rest. In practice, that translates into the following. If we look at the dashboard here, um, we see that the file is fairly up to date, although we see now that the oldest records are getting close to a week old. And that is typically the result of the weakness of my approach. As I'm always focusing on the top movers, it means that a stock that has been rated with accumulate or buy, but that moves every day a little bit slowly and creeping up to the first resistance may stay under the radar. And that's why every now and then over the weekend, I'll just start looking at all the oldest reviews and the stocks that have not been reviewed the most recent, despite their rating. And obviously, I'm hoping to find there some rating reviews from either reduce or hold to accumulate or buy. And then if we're really lucky, we'll have some new records, some new stocks to add to the sweet spot. That's exactly what I'll start doing today. So let me first sort this on date. Let me have a look here. Last update. There is. Ascending. I'm assuming that is oldest to newest, and it is. So we see the oldest records are January 1, 2023. I'll start updating these. I'll do that offline. I'll not bother you with hours of manual checking of records, but I'll come back in this recording every time we find a record that's worthwhile, being a rate review and an increase to accumulate. So let's hope we find some golden nuggets on the beach today. And whenever I do, I'll get back to you. So here we have the first one that we found in the weekend update and cleanup of the older reviews. Where over the past days, Amazon has been upgraded from hold to accumulate. Actually, this is being fed by the automated file already. So that is great. If we look at the details, overall, Amazon is behaving quite bearish. It has been for a while, but a reason to switch and to upgrade to accumulate is that um, the stock is probably very cheap. So I'm not saying you should buy this. I certainly would not. But if we look at the first resistance that is here still mentioned at 103.79, that has now come down to 96.25. So obviously still in the sweet spot, by the way, above 10% and rating of accumulate, but as said, I would not buy. Let's see if we can find some more gold nuggets here. All right, so we've processed now all the stocks that had the last update on January 1, and we're now looking in the series with the last update on January 2, and we found the second upgrade from hold to accumulate. Crane Holdings, if we look at the technical analysis, see that the buyers are clearly in control. So we'll see a technical catch-up ahead, and all the indicators for both the short-term, mid-term, and long-term are very positive. We look at the first resistance, which up to now was 104.4. We see now that the first resistance has increased to 106.04, which confirms the upward potential there. 106.4 brings us a spread of 2%, so not a candidate for the sweet spot, but definitely another increase to accumulate. So again here, record that was last updated January 4. Upgrade now from hold to accumulate. Guidalorto Corporation, not sure if I pronounced that well. But if we look, that is a record that has just started a rally, strong technical catch-up ahead, and a definite improvement in perception all around. So I'm going to give this the usual additional tag here to keep an eye on this one. And if we look at the first resistance, which was at 104.312, that has gone down a little bit to 102, and unfortunately the spread has gone down, but still in the area of the sweet spot. So in the end of the video, when we review the sweet spot records, we'll definitely find this one again. And another one which shows that if you keep on fishing, you not sure what's happening here. Yep, you'll catch fish. Biomarin Pharmaceutical upgrades since January 4 from hold to accumulate. I think we were a bit late in the rally here. We see the upward momentum upward sentiment is losing momentum. Although the short, mid, and long-term indicators are all positive, so this may recover, but it may also not. We don't know. In either case, first resistance has gone down from 122 up to 109.56. So not much spread left there, but we'll see what happens when we break that resistance, if we have then continued move, or if we do not have. All right, we're going to leave it at this for now in terms of sharing. We've shared, I think, 3 or 4 upgrades from hold to accumulate that we discovered while looking at the oldest updated records. All in all, today, and that was not surprising given the successful day on Friday, we had 22 upgrades to accumulate, of which we still need to process 8. Obviously, I'm not able and not willing to share everything that I'm doing here. But we can see that we have no records older with an update older than January 4, so that is second half of last week, and most of them have been updated with the date of past Friday. What is nice is we've got 7 stocks in the sweet spot, and I remind you, stocks in the sweet spot are those that have a rating of accumulate or buy, and a spread to the first resistance of at least 10%. Really nice, ranging between 10.21 and 15.29%. And of those 7 in the sweet spot, there's actually 2 that we've identified here that are very early in their rally. So of course, nothing is certain, but these are definitely worthwhile looking at together with your professional advisor. That's it for today. Tomorrow I'll be working probably a little bit on my watch list for European markets, which I'm not sharing here. There's not much interested in that for now, but that may maybe change in the future. As usual, again, thank you very much for watching this first weekend routine where we've been doing some cleanup and where we've ended up with a nice sweet spot collection of 7 stocks. Don't hesitate to like these videos, and if you're even more interested, to subscribe. This is a very new channel, so we need to build everything up from scratch again, and in particularly the likes do help to influence the YouTube algorithm. For the rest, have a great weekend. Talk again next week.